Thank you. It's Mario Daniel Sconza. I hope you're having a very happy, healthy, and productive day. Predictions of a collapsing real estate market in Toronto have so far failed to come true. Despite serious listing shortages, especially in freehold houses, 2014 ended with 92,867 residential sales in the Greater Toronto Area, very close to the all-time record of 93,193 reached in 2007. The shortage of listings led to a multitude of bidding wars, particularly in the low-rise freehold sector. In the city of Toronto, 42% of houses were sold above the listing price. 42%! In the surrounding area within the GTA limits but outside of the city boundaries, the percentage of houses sold above asking was 17%. Condo sales were also strong, with 10% of units sold above the listing price in the city of Toronto and 9% in the 905 area. 35 houses were sold between 140 and 195% of the listing price in the city of Toronto. The highest percentage, 195%, was paid for a two-story detached home requiring renovation located in Lawrence Park South, which was listed with an asking price of $699 and sold for $1,365,888. The dollar amount paid over asking for this property was also the largest in 2014, $666,888. The highest percentage above list price for condos in the city was 149% for a condo townhome, closely followed by 147% for a condo apartment, both in Scarborough. A condo at Yonge and York Mills saw the largest dollar amount over asking, $302,000. $302,000. We are currently sitting at an average property price of $566,726. In the last 18 years, the average value of a house in Toronto rose by approximately 186%. For comparison, the increase in average house price in just 5 years between 1984 and 1989 was 175%. In those days, houses were often resold several times, each time selling for a higher price. Taking inflation into account, average house prices have increased only 25.5% from 1989. Using average house prices on record since 1954, I have produced the graph attached below. As you may see on the graph, during this time span, there were 2 significant spikes in house prices and 3 dips. The red line denotes the trend. Each time the average prices rose above the trend line, a correction followed. The rate of price gains since 2008 is a bit lower than the one which led to the 1974 correction, and that correction was significantly milder than the bubble burst of 1989. It led, however, to a 10-year period of stable prices. At the beginning of 2006, when the average house price reached $333,852, the price line crossed over the trend line. The increase, however, was moderate. The brief correction which happened in 2007-2008 was more of a leveling off of prices, similar to the period between 1957 and 1960. After that brief correction, the prices continued to rise, and the increases have been quite substantial since 2010. These increases, however, are still not as steep as those of the period between 1985 and 1989. When the prices rise faster than the trend suggests, historically, the market eventually slows down. Whether the prices become stable following the trend line or actually drop seems to depend on the speed with which the price increases happen. The steeper the angle of the curve representing house prices, the more likely is a price correction. Price increases since 1986 have been much more gradual than in the period between 1985 and 1989 and follow a much gentler curve than the ones leading to the past 2 peaks of 1974 and 1989. So what does all this mean? Buy real estate and hold it. Create wealth slowly, usually, and get rich quick, rarely, but not never. I've seen it. Happy to have a more in-depth discussion. Thank you for listening.